Boom. We are alive, ladies and gentlemen. Thank you for joining us today. Mwah! It's a wonderful day here in Costa Rica. I hope you all are enjoying yourselves. Yes, we have left phase D of the Wyckoff distribution chart and moving into phase E as we likely head $18,000 support area. Now, what does this mean? Well, it means that we can still rely on the charts that we've been using for the last year and a half. And I think that the ideas that we went over yesterday are hyper important. So we're going to continue down that line of thinking. And I want to start by going here, boom, to our Twitter page. If you do not yet follow us on Twitter, please do so. One of our private members who has been helping us keep up to date because he is significantly better at Photoshop than I am, Glasswalker. Big shout out to Glasswalker updating this Bitcoin redistribution chart every day for us in the private group. Thank you, Glasswalker. You get a big round of applause from all the Bear family for doing such great work here. We've been talking about the potential of this redistribution chart for the last 2.5, 3 weeks. The reason being is because in phases A and B, it's actually very difficult to tell where you are. It could have been reaccumulation. As a matter of fact, reaccumulation after decline looked quite probable in early June. Let's say June 20th, June 24th, and there's a reason for that. Again, as you start to learn more and more about how Wyckoff architecture and the volume or supply signature works, you really start to become more patient in addressing where we think we're going. It's not about getting it right fastest, it's about getting it right, well, when you need to know. Getting it right super early usually happens by luck. This is one of the reasons why people get so down on technical analysis is because they think that, oh, you got to see it didn't work, you got it wrong. Well, back here in the early parts of, later parts of June, later part of May, we didn't know. We could have gone either way still, but as we entered phase C, it started to become more and more obvious that what we were witnessing was a redistribution. So I wanted to go over that. So again, thanks to Glasswalker for sharing those charts. And here we are, Bitcoin on the daily. Now, one of the reasons why I think taking a macro perspective is so important is because there's just so much time involved with any cycle. Yesterday, we went over one of the most interesting parts about this conversation, I think, is accumulation. One of the things that most people get wrong is that in a bear market, they get scared, or let's say in downside, they get scared. Bulls run at the first sign of red. And here, what's interesting is that the bears, at least the ones that know what they're doing, see the downtrend as an area to accumulate. I went over this idea yesterday that the bears are actually emblematic of those who know how to accumulate for the long down season. That's literally what a bear does every year. I don't know where bulls just run at red, right? There's this charismatic, like the deeper emblematic function of each of these animals, I think commonly gets overlooked because people love the bull market because everything goes green, and they don't like the bear market because everything is going red. But if you look at the function of each of those animals during that process, you would understand that you would rather be a bear because they know to accumulate in the downtrend. And then when things are nice and green, usually chop off and eat some of those red berries up at the highs. So what's the point of the macro perspective? Well, the macro perspective shows us this really unique posturing, which is, if we go again back to our Twitter here, what I wanted to functionally go over was a chart that we shared yesterday, this one here. So this was a logarithmic chart that I drew up yesterday as well. And what I like about this idea is that it shows that every time we come down, everything after the cycle high has effectively been accumulation so far. That means every time Bitcoin started to go down, if you were to buy it, even on the way down, you were accumulating at a good price. If you rewind, which we will now do, and we'll stick on the non-log chart for now, and look at 2014, 13 to 2017 cycle. So here's the funny part, right? Say you bought at the all-time high of $1,000 American, which is one of the mistakes I had made. It also what led me to start to study. Now, if you stay consistent and you accumulate even on the way down, you're actually getting a really great average price, because technically, if you were to accumulate on the way up, you would be excited about the price on the way up. So why not be excited about it for accumulation's sake on the way down? And that's what I really think the posturing of a chart like this starts to show. It starts to show that almost irrelevant of the market cycle itself, if you know the strategy of a good long-term investor, you can basically excel with very little effort. If you are a carpenter, you should remain a carpenter. You're not going to all of a sudden become a day trader. Maybe you could, maybe you would want to. Not my suggestion. Here, it's much easier to continue to do what you already A, love, or B, are good at. Hopefully those two align with yourself, but nonetheless, if you just consistently acquire and execute a strategy, then you will become ultimately successful, because these are long-term games, and anyone who has a significant amount of capital can play them on the long term. Now, yes, we do, again, like to remove profits near highs, which we've talked about, and what my strategy has been for the last almost a decade now, is just to remove a multiple years worth of costs. Because I know that for my old businesses, we've had multiple times where we do really well one year, and then we have like 2 or 3 really kind of poor or crappy years where we don't make any capital. So I got used to making sure I always had around 3 to 5 years of capital, effectively moving. Otherwise, I'd get stuck in business, right? So my trading strategy of profit taking has effectively followed that same strategy that I acquired for myself as a business owner and an entrepreneur, because I know that we have hard times, we have down times specifically, or the hibernation, the crypto winters, as some people call them, and it's important to know that. So when we look at a chart like this, what is it saying? It's saying fundamentally, if you execute a strategy of accumulation every cycle, you will do well. Ignoring the price is actually a great way to go. So you'd be like, oh, well, Tiho, what's the point of even understanding any of these cycles to begin with? Well, I think it's actually extraordinarily important, because that way when you're executing your strategy, you can do it with confidence. You can do it knowing to some degree or another that you are actually doing something that has a strategy behind it, not just willy-nilly buying whenever you think the price is low enough. Just buy monthly, and what you end up getting is a beautiful average usually. So had you been executing that strategy in 2013 through 2017, or even 2017 to 2020, what you end up getting is an average price throughout the cycle itself. So you made the mistake, you bought the all-time high of $20,000 in 2017, and you just kept executing. Your monthly buys, whatever you could afford, before or after expenses, I guess. And then what you get is this nice price that would have made, let's say, around $8,000 to $6,000 you would have averaged, right? So you end up getting this beautiful average price without having to think about the market cycle at all. So knowing these trading ranges, yes, you can capitalize on them significantly if you wanted to be a day trader, or if you happen to be someone who's managing a large amount of capital, that you can see some of these signs coming in. But it allows you to also execute a confident strategy on the long term. So we've seen a big wave up and a big wave down. Do I think that the bull market is over? No, technically not. We've went over this. Look, the bull market started way back when Bitcoin was birthed effectively and has not really stopped. What you see is different areas of accumulation and then a continuation of the bull market, right? So that's why I really want people to adjust their mindset around what the bear market is. The bear market is supposed to be for accumulating the same way a bear would accumulate, so that he can make it through all of the winters and the summers and all the other fun times ahead of them. Anyways, I thought that would be really fun. Let's go take a closer look on the 4 hour, actually around the 45 minute here. Here's the 1 hour for the Bitcoin chart. Again, we are, a huge shout out to Glasswalker for this one right here. There was yesterday's update before we had the drop, and here's Glasswalker's update for us today, including the drop. As you can see, we're following very close with where we are, and as soon as we couldn't break out of the bottom, or couldn't break out of the top of the TR, or the trading range, we started to fall and are likely headed down to around $26,000 to $28,000 quite quickly in the next few days. Now, one of the things that's important here is, well, it's twofold actually. There's a few things that are important here. Let's take a closer look at the last 48 hours of trading significance, right? So in the Wyckoff study, one of the most important things is called effort versus results. Now, I talk about this frequently. It's one of the reasons why I love venture capital. It's because my effort can remain limited and the result can remain asymmetrically like infinite, effectively. So there's a lot of room for upside with very limited room for downside if you continue to play the game effectively. So Here we could see that there's an increase. First off, there's an increase in selling signature as we started to move down each of these drops. And you know, what's interesting is that in the midway of the market where we are now, because I do still believe we are effectively in a mid-cycle, something equivalent to the 2013, 2012 to 2013, where you have like maybe a 200 to 400 day accumulation cycle. I do believe that's what we're going to see for Bitcoin here, is like a 200 to 500 day accumulation cycle, just enough to bore people. So how low we go is almost irrelevant to me. We do have a very strong supply signature support around $23,800, and then they do continue lower. Obviously, you have the top of the trading range at 18,000, and then our primary regression line is all the way back down around 18,002. So we could very easily come to 12 to 18,000. Now, do I think that's going to happen? Not necessarily, but I also don't like to predict the future. I just like to move with the future. So as things continue to develop, then we change our strategy. We don't change our strategy before we know what the developments are. That's counterintuitive, although people would love to think, oh, I could just predict everything perfectly. No, we've never once said we can predict things perfectly, but what we can do is be patient until there's enough data so that we can give the best, most reliable potential for what we're witnessing, instead of just cry wolf every time and change our mind. Oh, it's going up, it's going down, we don't know, what is it doing? Well, after phase C starts to execute, we actually generally know what it's gonna do. So we just have to be patient for that. So this supply signature increase here was very noticeable. Let's get a little bit closer here to see what's going on. Yeah, okay, so here, this is the perfect example. So this is the laws of effort versus result in Wyckoff. These are very important to understand. After the architecture, what you want to know is price spread, how far does the price move, versus the supply signature. So here you can see the supply signature is quite high, and the price spread is approximately 4%. Yeah, around 4%. Now, on the other hand, you have an equal supply signature with a little bit extra of a run up here, but creating a much more drastic downside. Now, we've fallen into a very unique area for a few reasons. Number one, let's just for craps and giggles pretend that there is a bullish scenario, because there's always a bullish scenario, although I think it's much less likely. I agree with Glasswalker here. This potential for a falling wedge here is also on the cards. Let's say we hit 26 grand and then jump back above 34,000 and close above the point of control. We could very quickly actually see, again, this kind of change of character where what ends up being a distribution turns into a reaccumulation range. We've seen stuff like this before because markets are scale invariant. Now, I cannot stress the importance of understanding what scale invariant means enough. It is probably one of the coolest mathematical terms that I have stumbled upon in all of my study. And I think that everybody should be excited by understanding what scale invariance means, because effectively, no matter how you look at a chart, if you were to remove the time frames, you would never really know how long that chart was in function for. It could be a 45-minute chart, could be a 4-hour chart, could be a 4-week chart for all you know. Time makes a difference in understanding scale invariance. So there is a possibility for a bullish return here, which we would hit like below, maybe let's say we go to 23,000 and then we jump back above the point of control. We could argue that this was like a huge reduced spring that was effectively out of the backside of the trading range, which we were just looking at. And we have seen these before. These are not the first Wyckoff trading ranges we've been mapping. We've been doing this for almost 2 years now. You know, Wyckoff has been around for almost 100 years now. He's a fantastic thought process. I highly suggest studying who he was as well. But here we can see two main characteristics that, again, lean us to more downside. We've gone over this, what appears to be a hypodermic top, or a head and shoulders as it's sometimes called, and we are breaking down out of that head and shoulders. Now, there's not a whole lot of support between where we are and the $19,000 area. So it's very likely we actually come down to $19,000 quite quickly. This is the previous area support. And after that, 13,000, right? So do you come down, jump up to 32 and then come down to 12? Or do you see a quick dip to 24 and then a jump up to 33? So there are still alternatives that lead to a bullish scenario here, although at the moment, again, our major areas of support are $12,000 and $20,000. So keep that in mind. I hope you are prepared for any downside in these markets. We've been talking about this redistribution chart for quite some time. And again, a huge shout out to Glasswalker, one of our esteemed private members, for helping us keep that chart up to date. If you want, you can go back and you can look at how many times we've done this on Twitter. Let's just click back a few here. We like posting memes, by the way. Let's see. Oh, no. These are not as easy to find as I'd hoped. Sorry about that, guys. But you can follow us on Twitter. We've been sharing Mr. Glasswalker's notes for quite some time. And if you want, join the private group, because the over-emotional trading and lack of education is really easily solved by joining a group of people who are effectively studying and working on these things all the time. So if you consider yourself adventurous and like to try new things, go to arcanebear.com/private. Sign up for the private group. We are full of amazing members. And again, a huge shout out to Glasswalker for helping us stay up to date with these charts. He's just so much better at Photoshop than me. I'm sure that, even this looks pretty simple, but it would probably take me an extra hour. And I don't have that extra hour right now. So thank you. I really appreciate that. So what's next? Well, anything lower than the cycle high is an area of accumulation. We just passed the 11th. I bought more Bitcoin then, and I'll continue to do so. I don't buy in enormous amounts at these particular times, but I like to execute a consistent strategy now, because now I don't have to think. Not that you should not think, but it's really nice to have something that you can rely on and go, hey, well, this is what time of the month it is. I'm just going to execute, because it's worked. It's worked for all of the years up to this point. I'm not sure why it would stop now. It's worked not just in Bitcoin, but it's worked in other charts as well. So let's go over and take a look at the general markets. The dollar, the US dollar index here, pumping up against the trading range that it was currently operating in since December. Now again, what happens to the dollar here will be hyper important. If we start to break and close above the trading range, it could bode poorly for everything. The S&P 500 has actually started to recover quite nicely. Now, here's the fun part. Here is another phase C starting to take place, right? So phase C, excuse me guys, I'm not the greatest at like getting everything charted and ready to go. I have other stuff I have to do. So hopefully you guys are doing your homework and you understand where we are when I say phase C in the Wyckoff accumulation areas. If you don't, when you join the private group, you have access to all these wonderful PDFs where we go over very specifically, I should have opened this beforehand, probably would have been a good idea too, where we go over very specifically what all of these phases represent, how they work, and what to look for. So, where's phase C? Phase C, spring, it appears quite often, or the breakdown. So this is for areas of accumulation. Shh, be quiet, Siri. So here is, again, studying some of these trading ranges prior, just so you get a good example. And then for distribution, again, same thing, but opposite direction. Actually, here we go. Where's that hypodermic top we were looking at the other day? We were looking at in Bitcoin, just to kind of go over it. Sorry, guys, I should have opened this up. Yes, here we go. The hypodermic top. This is actually a great reason to look at Ethereum right now as well. Boom, to boom, boom. Okay. Here is Ethereum. Looks very eerily similar to the hypodermic top. Cardano looks the same as well. Boom, like this. We'll put them side by side. So here's the hypodermic top. We've got our buying climax in phase C, and then our major signs of weakness, and then our last points before we break down. We could go much lower for Ethereum. There is no real support since $600, so we could easily come down to $600 Ethereum. Just looking at the charts. Cardano is actually also in a very similar place. Looks identical to our schematic of distribution through a hypodermic top. I'm not going to bet against it. It's important to understand that the entire market moves almost in unison. So as Bitcoin starts to break down, you can now see that Cardano has pushed itself into the bottom. I should probably make single updates about each of these, and I will try that over the course of the week here. But as you can see, we're seeing distribution in literally everything here. For Solana, it could hold back to 12 bucks. Serum is pretty much right back down near the bottom here anyways. It's not a whole lot lower it could go. We've got a lot of support at $2 for Serum as well. But yeah, you can see big breakdowns and distributional patterns taking place all across the market. So when we look at the S&P 500 and we know that we're looking at a potential phase C, and we know that we have schematics of distribution where phase C, let's see, where is the one we're looking at, I think, for the S&P 500. Yeah, something like that. We could actually even call it a double top. Boom. So here's a schematic of distribution for the double top with the UTAD kind of jetting up and then coming back down. So I do believe we're about to see effectively a major sign of weakness for the S&P 500 or not. The S&P 500 has started to recover quite quickly. And this is what's interesting about phase C and why you want to be patient here. Phase C can actually turn into an area of reaccumulation. So we've gone over these a few times as well, and I probably should have opened all this stuff up, but ladies and gentlemen, I never know what I'm going to talk about beforehand. We just start and see where we're going. So here is from our private group, the reaccumulation schematics. And as you can see, phase C here can have these weird moments where you break above the box, you come back down, and you continue upwards. Actually, the other way to do this would be if you are a private member, you can go to arcanebear.com. Hopefully I'm still logged in here. Thank you for bearing with me. I am not logged in here right now, but if you are logged in, you could go to the Wyckoff trading ranges, and we do have variations of these reaccumulation schematics drawn up. So phase C can actually turn into a reaccumulation here very quickly. If we stay above the box and move higher, especially above the top of that previous horizontal trading range now that's above this old trading range, we could go higher for the S&P 500, but currently, just due to where we are, we would assume that it's a phase C distribution. You want to assume that phase C above the box is actually to the downside unless you see a close above the previous high. And again, we have seen these multiple times before. We saw that in Ethereum back in February and January. Let's go back to our previous trading ranges here. Yes, perfect. So here are our previous trading ranges back for January. As you can see, we broke above the box, came back down to the top of it. Here's your top of your trading range. Here is your bottom. So this should have been an upthrust after distribution, but as we couldn't close into the box and we actually started to move higher, there's a very bullish signal. So you have to be patient for phase C here because it can turn bullish. Effectively, right? This is why patience and understanding the Wyckoff methodology is so important, is because phase C and D can actually really go either way. And they're your last moment decision makers for what the market is going to do. Now, because Cardano looks so bearish, because Ethereum also looks so bearish, we want to assume that at least our general market has a tendency to want to lean to the downside. Again, here you can see this rather nice looking hypodermic top. And note, ladies and gentlemen, there is basically no support for Ethereum back until $650. So what does that mean? Well, patience in almost every aspect of this conversation is really your leading indicator and your driver. Here's our trading range that we drew up in 2020. This trading range paid off astronomically well. It did so fantastic for us. Well, what was the difference? Well, this trading range took hundreds of days from its selling climax to complete, at least 600 days. Our first breakouts of that trading range, the SOS and the LPS before we had the bull market, were absolutely fantastically timed. If you've been in the private group for quite some time, you nailed this one. I was going hyper long. Well, that's the wrong way to say it, but I was taking out some fairly decent longs at 430 bucks here. 408 to be specific. But the point is that when you give yourself enough time to study these things, when you're patient with the market, when you understand a strategy of accumulation takes time, you're not going to figure out the markets overnight, you're going to do really well. And I really suggest that you go down this angle. So let's take a look at a few more on-chain metrics. Oh yeah, you'll have to log in to be able to use the private members area, but ooh, doom. Yes, okay. The crypto fear and greed index over time. We're actually in an area that's, again, still purchasable technically. We're not anywhere up in greed. as you can see, well, December all the way through May, we were pretty high up there in greed, and then we started to fall quite drastically after April. The hash rate for Bitcoin is still staying, has recovered a little bit. A lot of the miners that we lost out of the Chinese area has not come back online yet. This is probably another reason for the big capitulation that we're seeing. And then also another reason why I believe the accumulation cycle we're going to witness is probably only another 400 days before we continue the rest of the bull market cycle. Glassnode's data here, or more importantly, whether it's Glassnode or not, because hopefully we're going to be building our own version of this. What we can see is that there's a massive amount of supply that came into the market in the last 4 days. We posted this in the private group as well. One of the reasons why this is important is because as the amount of open supply on the market increases, so does the volatility, right? It goes in both directions. So that supply signature, this was another leading indicator that we kind of knew the market was going to go down, not just that distributional chart, but in the private group, as you can see just before that, here is the Glassnode data of this massive spike up to here saying, hey, be sure you're in a position to take advantage. A massive chunk came into the market. I expect volatility and likely to the downside. This was on the 18th. That would have put us a few days backwards. This is really important to understand this stuff, guys. I think that it makes a huge difference in your ability to emotionally manage your trading positions, your investment positions, and really, really understand how the game is played. So we're basically back down an area of no risk too. So just for kind of an understanding, I do really like the reserve risk ratio here. If we end up back at Bitcoin at around, well, it says 10 grand on this green line here, but it's actually a little higher than that. As you can see here, it says 10 grand, but the price is actually, there, yeah. Well, so yeah, we could actually come quite a bit lower here, but our reserve risk is effectively almost in the total risk-free area. So as we start to come down here, we're in a great area of accumulation. And as you can see, if we look back in all of our data, first off, we do see declining highs within the chart itself. So there is a fundamental trend here to the fact that we are not seeing the crazy hypodermic breakout tops like we did in 2011, 2012, 2013. But we're still way below the breakout of the reserve risk, right? Where in 2017, like we were risk on anything above 15 grand. It was like, whoa, way too expensive Bitcoin prices, you know? But here, even in this area, this is still like a very low risk area of accumulation. And I think what the big players are doing, because the Wyckoff method is effectively learning how to chart how the big players move the market, is to try to push the price down as low as it can go so they can enter, again, as we've shown many times before, another area of of accumulation. Whether it's long term or how long, we don't really know. But effectively, we're at a risk-free area of entry almost here. So I don't think we come too much lower than between 18 to 23,000. We likely don't spend much time down there. I do believe the market cycle that we had gone over on our Twitter page here the other day, or is it this one? I do believe, and again, so if we came down to the top of the previous trading range, it would be around $18,000 to $23,000 as well. And we have seen that in the past in the 2018 cycle. We didn't come all the way back down to the bottom even. So there is still room for conjecture, but most of the times we started to create a new trading range based off of one of the previous areas of support. So not to discard the downside, I love this chart. To me, everything below the cycle top was an area of accumulation. Effectively, everything in Bitcoin's price history is an area you would want to be buying, technically speaking. That is such a powerful fundamental to think about. Now, will it always stay that way? Who knows? Bitcoin could fail. I'm not betting on that. But it really, really helps measure out the long-term cycles. So we're going to leave it at that. We're going to spend a bit more time going over today's questions with you guys, because I think that's important to do. So at this time, hey, give us a thumbs up if you like this content. Thank you guys all for joining us today. We really, really appreciate the support. We're going to go over and take a look at a few of your guys' questions. Okay, so for and Nansen here says pure manipulation. He just has no idea how the markets work. There's no such thing as manipulation in the market. It's just people that have a hell of a lot more money than you do. So you sound like a broke ass when you talk like that because you don't know how these things work. I really think that's such an important function. Really, really clearly makes a huge difference. If you think that the markets are manipulated, it's because you don't know how the markets actually work. Period. So I would ignore what Nansen says. Stop looking at Tay and look who's accumulating BTC on the dips. It doesn't even really matter who's accumulating on the dips. Again, we can use Glassnode's data here for that stuff. We do, again, actually that would be kind of fun to look at. My main interest is actually where we are in the risk. I don't really care who's accumulating it. It's less important to me at this moment. Mr. Kruner says, Tio, can you look at the money flow indicator? It's at an all-time low on the weekly chart. I'm not sure what the money flow indicator is. Is that a... is the money flow? I'm sorry, I don't use that. I try to keep all of my charts as simple as possible. Otherwise, it's really easy to end up with a lot of noise. So I don't actually use the money flow indicator. You'd have to tell me where it was to look at that. 100 to 10,000 says, how did you meet Naval Ravikant? Oh, that's a fun question. Naval and I met at an ecstatic dance. If you guys don't know what that is, it's where you just go dance. We were in Bali. I was hanging out with a really good girlfriend of mine, and I looked up, I saw Naval, and I didn't want to bother him, but my girlfriend happened to know his wife, so I was like, oh well, great, let's go say hi. So she took me over and introduced me, and then I ended up he invited me to do meditations with them. So big shout out to Naval, who helped drastically increase my meditation practice. We were doing like 4 hours a day sometimes of closed eye meditation for a few weeks. It was fantastic. It's one of the best moments of my life. I hope to be able to get back to a group of friends and people who want to spend multiple hours a day just sitting eyes closed doing nothing and listening to the wind. So if you happen to be one of those people looking for friends to meditate with, it's always a fun thing. Oh, Mr. Kruner says MFI, it's like the RSI, but also uses volume in calculations. Okay, well, tell you what, let's go over to the indicators, and just for fun, we'll take a look. So we've had someone ask us to take a look at the money flow index, the money flow index. I'm assuming this is what he's talking about. I can't tell. None of these are really stand out. We'll go with the one that has the most likes, I guess. The 6,000. That seems to be the highest. Let's see what it does. Oh yeah, please know we have a bunch of charts up here. Yeah, it's not. I mean, okay, yeah, I mean, here it's at a low. I don't know what that would functionally mean. The spring, are these buy areas? They're green, sure. We've got a lot of sell pressure there, that was for sure. It almost looked like an area to accumulate. There's the spring that we were most interested in. I don't get anything valuable from here that we don't already get from other indicators you use. Now, you can see the RSI at the top. You can see we have a fun squiggly line indicator here, and the money flow indicator we've just added. This just looks like noise to me. I effectively I try to stay away from using too many indicators. It just creates nonsense. But if you're part of the private group, we do give a bunch away. Some of the fun stuff we give away is like the bear claw. This is one of my favorite ones. Here's the bear claw. So if you're part of the private group, we do give you guys access to all of our indicators. Some people charge hundreds of dollars for these indicators. We don't. Once you sign up, you have access to 3 or 4 of them. And you can keep them even after you leave, I guess, if you'd like as well. It doesn't make a difference to us. I want to go back to this. So I actually like the bear claw. We don't show it too often while we're on screen. We try to stay specifically focused on Wyckoff accumulation ranges. Again, I try to remove data. It can be really difficult. But as you can see for Ethereum here, we could not get back above at all with any of our trading volume. And it looks like we're headed to the 314-day moving average for Ethereum as well, which is down near the $1,400 area. We can see this nice area that's pumped out around $1,800, but again, we've hit this floor multiple times. It's likely that we will break through it. So I'm not, again, with the money flow indicator, I don't like using things I don't use often because I don't know how to properly adjust to what it is I think I'm seeing based off that data. But also, one of the important parts to remember is that if the more data you add, it does not create more signal necessarily. So often what I like to do is remove a lot of data. It's why you'll see often we don't even use candles in our chart. We just go with the area chart. I think it provides a much cleaner outlook for what we're looking at. So we try to remove data more than add it itself, technically. Okay, so take a look at some more of your guys' questions. We'll make this episode extra long today. Do you rate the golden ratio multiplier? No, I don't use any of that again. Try to stay away from that. Santander says, Naval thinks crypto could overtake governments and financial systems. Do you agree? Yeah, I do agree. I think it should. One of the fun things, and one of the things I really don't understand how Bitcoin maximalists haven't figured this out, but one of the most valuable aspects about Bitcoin is it's a distributed system. A distributed system means there should be no centralized control or power or single entity. So that also means that just Bitcoin is actually a no function point in distributed systems. You would want a bunch of versions of a Bitcoin because that's what makes distributed systems powerful, is that there's no one central failure point. Now, this is also what makes large governments weak, is that they have a single point of failure. And I think everything should become more distributed in terms of its systems, from government to finance and vice versa. They're closely related. This is where a lot of the corruption comes from, is the relationship between those two, and the ability for large corporations to basically lobby the government, which is known as crony capitalism. It's it's a different story. But anyways, I do think that distributed systems can be hyper valuable. Nice studio, thank you. I love the little terrarium behind me here. I even picked up a new guitar for when I was in town. I love that I can just a little out of tune, but that's what happens when you buy a new guitar. Yeah, I'm super stoked to be here in the studio for the next month, and then I'm going to try out a few more beach towns. So thanks for that. Michelle C says, I started investing in crypto in November of last year. I do not plan on taking any profits for the next 2 to 3 years. Is this a good strategy? Effectively, I think a good portfolio should be built over the course of 30 to 40 years, and you should focus on revenue generation and then asset acquisition. So 2 to 3 years is actually a very short time frame, technically speaking. Anyways, are there any particular alts that are not on the Arcane Bear website that you think seem likely to come out strongly from the accumulation period? We focus on venture capital frequently, so this is kind of fun. Actually, let's go over this right now. This is a fun question for us. Let's see, I don't even have the charts open, but that's okay. We don't need to use the chart. What we'll do is we'll just talk about the company. So here you guys go. We'll go back to our Twitter page. We invested, so the idea of heads I win, tails I only lose a little can't be repeated enough. Here's one we invested in during its launch and its IDO. Real Fever, they are an NFT platform, but more importantly, they already had 1 million users in the fantasy sports league. So that's first off, 1 million users is not a small amount. And they own the rights to Cristiano Ronaldo's first goal, which is, again, another pretty huge deal if you know anything about soccer or football, as they call it. But here you can see Arcane Bear, Real Fever. We like to have podcasts with these guys. So I went huge 1 million users football NFT. I usually don't make too clickbaity of titles, but anyways, they had a 13x within a week of their launch. So there are still things moving in the bull market, but or in the bear market effectively, but it's about how you play the game. So there are some NFTs that they're going to be dropping. You can enter your chance to win. Actually, use the link down below. It is in the video description to join in their NFT drop and potentially maybe win Cristiano Ronaldo's first goal as an NFT. That's kind of what we're betting on. I'm not a big sports fan, nor do I know a whole lot about NFTs, but I know that there are a lot of sports fans, and I know that a lot of soccer sports fans in specific. That's where we are placing our bets there. So the idea that I wanted to get to was the point of accumulation is that in these markets, we're actually trying to often find things that don't even exist yet. So we try to invest in things before they have tokens and they're very, very early stage. We try to find them and then invest in them like right at launch. And then we increase that investment if we think we got it right over the course of the next few years, right? So if we think we got it wrong, I just let it go to zero now. I go, great. That's what I was willing to lose. Tails, I don't lose much. Heads, we win. Had you put $1,000 into Fever, it would have been worth 16,000 at its high. Tails, I don't lose much. Could have only lost $1,000. There's upside potential for 16x. Maybe it'll go even higher. Who knows? Not financial advice, but this idea of asymmetry is so, so valuable. Thoughts on August 4th? I have no idea why August 4th would be an important date. Any thoughts on BTC supercycle? I think when you start to hear people talk about Bitcoin supercycles, it's because we're near the end of the market, and that's what we saw, at least temporarily, right? I don't. If you remember what I've said, I think Bitcoin bull market has not ever ended. We've just seen accumulation cycle after accumulation cycle. Yes, I don't. I try to ignore certain aspects of like, oh, the Bitcoin super cycle. It sounds like BS to me. We've never seen a super cycle. Why would all of a sudden something change? We have a lot of data that repeats itself, and then now all of a sudden after like 15 years, it's just going to change. That seems nonsensical. Arcane Bear is a paid insider to spread FUD. You're an idiot. Yeah, I guess, yes. See on the screen there, it says, Nansen, your comments are lame. We're just going to block you because we don't like lame people. You can go comment on somewhere else. You do not deserve the chance to say nonsense. If you just want to lie on live stream, you're right, I will delete your comment. And in fact, I will remove your ability to comment at all. There you go. That's how that works. Too many people have commented already that they do not like your comments at all. So, bye. That was easy. See, guys, we solved that problem. No more Nancy. Okay, some more questions. Thank you. We'll go over these. Have you ever looked at Near Protocol? Nope. If you love fibs, does that mean you think we are at the bottom now? I do. That's an interesting question. I don't think we're at the bottom now, especially after what we started the video with. Let's see, do you think Bitcoin will ever go down, like to zero? Oh, it could totally fail, yes. Look, we could get hit by an asteroid tomorrow and basically everything would go to zero. You can't factor out what Nassim Taleb calls the black swan. It's impossible. We know that random cataclysmic events in every field happen often, so we don't know when they're going to happen or why they're going to happen, but we do know that they happen. So, yes, that is a possibility. What would cause that? I'm not sure. Hard to say. Asteroid? Asteroid could definitely do it. Asteroid would bring everything to zero pretty much. So it is a possible, but not a highly probable. Let's see. 100 to 10,000 says, have you ever seen the market forecast Robert Prechter? Prechter. I know that name for some reason. Is Prechter the guy that came up with the Fibonacci? No. Well, we know that Fibonacci was actually created by Fibonacci. It's a mathematical equation that expresses something very similar to scale and variance. But I think, yeah, who is Robert Prechter? Is he the Fibonacci guy? Maybe this is fun. Well, we're going to do a really long live stream today, I guess. Let's see. Robert Prechter. Well, I forget what he did. A financial stock author, 2 books, born in 1949. Oh, what is this? Bachelor degree, Let's see. Okay, it says his ability increased. He won the trading championship in 1984 with a record of 440%. reintroduces Elliott. So Practice Career publishes efforts to reintroduce the Elliott waves and principles to investors. Cool. Oh yeah, I have heard that name before. I forgot where I'd heard that. Elliott waves. Let's see here. A few more cans of beans. I have a farm with a private well, an extra fridge stocked full still. That's my hedge against everything. Let's see, a few more ones. Aliens, sure, aliens could affect the price too, although I don't think it would be to the downside necessarily, although people do get scared of everything. Do you ever think of the market while you're tripping? Oh, that's an interesting question. No, I usually, although you do see the similar repeating patterns, like the Fibonacci sequence repeat itself. That's not my first thoughts. No, I'm usually thinking about how's my breathing doing? Oh, these are really cool, colorful things that I'm seeing. Why didn't I smile at that person that looked a little upset while I was walking? I should have smiled at them. I probably would have made their day better. That's usually what I think when I'm quote unquote tripping. Thoughts on decentralized insurance protocols in the future? Oh yes, we've actually started our research into one of the companies that we do like. If you go to arcanebear.com, we do have a new bout of research into what we consider venture or early venture capital. InsureAce did land on that list last week. We have a podcast book with their team, but if you'd like to know more about what we think about InsureAce, which is an insurance-based decentralized protocol, you can read our write-up here. And everything else in our kind of venture capital bucket, you can look up under Wu Wei. Real Fever was one of the other ones that we had gone over as well last week, and why we think it's a good product, why their NFTs are valuable, who's on their team, who's funded it, etc. So we try to give you a fairly good deep dive to everyone for free to take a look at on the website there as well. Any thoughts on Omni on comparison to Fever? I'm not sure. I didn't take too deep a look at Omni, but I do know CryptoNut, one of my best friends, did invest in them. I think Omni is a social media platform. I'm not sure. You would have to correct me on that one. Social media is not my forte. I'm surprised I'm even somewhat relatively popular on the YouTube here. It's surprising to me. NP asks, Real Fever is basically the IP rights biz. Question is, do they have connections to get those? They already own those big soccer league video rights. So again, if you go do and you read your research on our website here, they already own those. They don't have to get them. They already own them. That's why we invested there as well. Good question. Thank you for the super chat, MP. You should look at larger cycles. They predict a crash. Larger cycles in what? I'm not sure. Hey, please tell me why you don't like the golden ratio multiplier. It involves the fib has got right each cycle without fail. I just use what I have been using. It's not that I don't like it. What I use has worked for me, and why change what's worked? It doesn't mean, and like I said, I don't want to add more noise because it dilutes the signal that I already have. We've been in a bull cycle for decades. We've talked about this. A lot of people think that like a big hyperbolic crash is coming. I disagree with this sentiment. I think that we are basically in an only up scenario. There's no choice for them but to keep printing money. When we do finally come collapsing back down, we are going to be in a world of hurt. Either that or we're going to have a new financial ecosystem that's already productive. So we've gone over this a few times before. One of the things I think that's important is understanding that the monetary supply, here we go. So here's the S&P 500 versus the monetary supply. So as you can see, the supply, the market has basically followed the amount of money that they've printed effectively. And they can just keep printing more of it, probably for a lot longer than you think, because deflation is a fucking strong force. Damn, I didn't swear at all in this video up until that point. I didn't swear at all up until that point. So deflation is a very powerful force, very powerful. It's an exponentially powerful force. So that may mean they can actually print way, way, way beyond what we ever believed. In 2016, back here, before I started the channel, I started to tell everyone I knew, at least at that point, that I believed we were only going to go up effectively. I do not believe we're going to see some massive systemic crash like we've seen in the past. I do suspect we will see the building of another trading range potentially, but no systemic breakdown. And if we do see a systemic breakdown, it is, and look again, look how the monetary supply and the market price basically run head in head with one another. It appears to me as though what we are witnessing is asset inflation due to monetary supply. So all markets will likely continue to go up until they stop printing. They can print a lot longer than we think. Because deflation is so strong, they can inflate at an incredible rate and still not manage to get hyperinflation in a lot of the core base assets like rice or corn, water, wood, although we have seen wood drop around 60 to 70% almost in the last little while. So it's a core function to understand that I don't believe we're going to see a market crash. I've, since 2016, said we're going to see a market crash upwards because where are the assets going to go? The assets are the only valuable thing left. The US dollar is basically trash. So it's a good mindset there. Are you interested in El Salvador? Hopefully we're going to be, we are working with Murph's Life to go, so we can go actually help there as well. Nassim Taleb says Bitcoin is going to zero. I think Nassim just got so much flack from the Bitcoin community, and he was right to some degree when we were near 64 grand. He's like, Bitcoin's going to collapse. And he's like, well, he was right? So why get down on the guy for being right? I think everybody pissed him off so much that he just started to say Bitcoin's going to zero. I don't care what you guys think. So I don't think he's actually saying that specifically. I think he's saying that just because he got fed up with the Bitcoin maximalist community, and who wouldn't be? They suck. They're horribly uneducated, it appears, even about the fundamental core concepts around things like distributed systems and why you would want in decentralization, like what these core concepts of what made Bitcoin valuable in the first place just seems to go right over the head. Anyways, hope that makes sense. Any chance Tether could crash the crypto market? Crypto Casey did a great video series about it. Look, guys, they're just printing unlimited amounts of US dollars. Who cares if they're printing unlimited amounts of Tether? I don't think that the correlation and causation values don't meet up there. They're the same thing. The US dollar and the Tether is the same thing. They're a highly inflatable, unknown supply ticket. Like, I don't know how it would crash the market. Wouldn't have the dollar printing crash the market? No, it crashes the market upwards. The markets go up when they print more. Location Jason says, love you from Tio, Los Angeles. Or love you, Tio, from Los Angeles. Thanks for that. Don't think people get that blockchain is the last innovation. Well, that is not true. It's not the last innovation at all. We're probably like a decade away from fusion, not fission. Hyper important to understand the difference there. And hopefully anti-gravity. So super cool. Thanks for the clear up on the golden ratio. Really like your energy. Yeah, I just try to stick with what I've been good at and what has worked for me. Adding more to that usually just adds noise to my decision making, and I try to stay with the signal that I've found that works for me. You do whatever works for you. I support that. If you dollar cost average, when and how would you average out? Like I said, my focus is to always make sure that I have 3 to 5 years of operating capital so that I can maintain my businesses and live my life and focus on building new and interesting things. Yeah. 100 to 10,000 says the derivative market is of 100 trillion value. Once the bubble pops, it will default. Banks will end up in a spiral of deflation with no one having anything to buy. Just a possibility. Yeah, I don't think we'll get there. I don't think that the society will let that happen. If that were to happen, we would just reset everything. The value of water is still the same. The value of air has never changed. If I take it away from you, or rather, because I don't want to sound like a murderer, if the air that you were breathing gets taken away from you, you will very quickly to realize that the thing you've been breathing your whole life is infinitely valuable and massively underpriced. Worth a hell of a lot more than Bitcoin. You just don't know it until you don't have it or till you really need it. So keep that in mind. Value and price are a mismatch right now, and people hallucinate that. There's no price to anything. It's a hallucination. Tio, speak to me. Do I need to sell? What? Look, we can never answer questions like that. Those are questions that you should have been answering a long time before you got there. We exited our position for the next 3 to 5 years around 56 grand. I don't know what else to say to you. There's videos go over that. Do what you feel you're comfortable with doing. Like, I think if you're new, you should focus on just accumulation and never just buying, not selling. You should focus on just buying, not selling. I think you could do that for years and effectively come out ahead of the game. So, hey bro, please suggest long-term stuff. Anything we think that's good long-term, you can find on our website. We'll try to come up with a rating mechanism on there as well. Hey, Glasswalker's in the chat. Value can also be found in relationships and knowledge and in balance. Facts. I appreciate my relationship with Glasswalker. He helps make sure I can stay up to date with all my charts because I'm just one person. We're trying to bring you guys as much value as possible. So huge shout out to Glasswalker there. Thank you for jumping in the chat. I love your vehemence on air. Vehemence? I don't actually know if I pronounced that word properly. Vehemence? I believe that's it. Do you think it'll hit 27K? Yeah, again, the probabilities of the price going down are very high. We went over that in the beginning of the video. The importance of it hitting like, oh, will it go to exactly 27K? That's basically a worthless question because you're asking for something to predict that's specific. And I've always said that's never what we do. We don't predict specifics. We predict probabilities because at least we can get a range of function then. If you predict specifics, you're pretty much always going to be wrong at some point or another, and for a large chunk of it, because that prediction, like think about, hey, in 2006 or 2005, 2006, 2007, Michael Burry appeared to be wrong about his prediction of the housing market collapsing. Well, and then he was right eventually. It paid off astronomically for him. Well, how right did he have to be? Well, he only had to be right. Not how right did he have to be. It was just that he had to be right, not how right. So whether it hits an exact specific price, I think is a nuance of misunderstanding the conversation of probabilities and predictions instead of like specifics, which is not a function of the probabilities we're trying to predict. Keep up the great work, Arcane Bear. Discovered you from around the blockchain. I value your opinion, your content you make. Thank you. I appreciate that. Bliskin says, I need to get back into the bear den. Yeah, guys, try it out. No risk there. If you sign up, you're not happy, we just give you a refund. You know, we've had very few unhappy members though, and they all seem to stick around for the long term, which is great. So thank you guys. Those of you that some of you have been around for almost 4 years now, and done extraordinarily well from that. So thank you guys for supporting us. We are down over 65% already. Someone's saying, I don't believe that's actually true. Is it? From the exact tippy top peak. Let's measure. I don't believe are we down 65% already? I don't believe that's true. No, we're down 55%. 10% off there. Close, but no cigar. See, and this is why we don't want to predict exacts. We're approximately 50% down. Well, that would be right, see. But if you say we're 65% down, well, then you were wrong. If you bet on, this is the perfect example, if you bet on specifics instead of probabilities, you're much more likely to fail. I focus on probabilities, not specifics. JB says, I also appreciate the Glasswalker charts, following you and learning. Perfect. Will we see total collapse to 3 grand? Very unlikely. Thanks, Tio. Nice pad. Thank you. I like this place as well. So you guys, and so one of you guys asked about Luna, Terra Luna. We do have the CEO of Terra Luna coming on the show in the next 2 weeks, I think. I think, no, booked for Tuesday. Wait, hold on. Thursday. He's booked for Thursday. Okay, we'll leave you guys out with a little bit of guitar, and we'll jump off. Just a quick moment to look at the charts here before we do that. Oh, by the way, there is a potential for a bullish scenario. Even though I agree 100% with all the charts we've gone over with Glasswalker, I have to point out that this could be a falling wedge, and we've seen this before. And in trading ranges, because of scale and variance, could do something like this and move higher. So this is why, again, we don't try to make predictions of exact price points. We just look for probabilities, right? A probability of going to $23,000 is very high. $19,000 high, but not as high as 23,000, right? So there is room for a bullish return here back above the point of control, but that's not our main focus or function at the moment. I think Glasswalker is correct in this one. Dylan Smith says he's unsubscribed. Well, that's great, Dylan. You know what we'll do here is say bye-bye. We don't really need you. As in fact, you think I blah, blah, blah. That probably means you don't have the capacity to understand well-executed and probably, let's say it this way, well-endowed ideas. It's funny. I love people like that. I love people like that. It's good. It's good to do. Okay, so we'll leave you out with some guitar today as well. Thank you all for joining us today with Tio with the Arcane Bear. I really appreciate guys' support. I always have fun making these videos. It is fantastic for me. You guys are so supportive. And we will see you on the next. Oh wait, hold on. DNA confirms says Willy Woo remains confident that Bitcoin is still in the bull market. Like I said at the beginning of this video, Bitcoin has been in the bull market since its inception. All we have is areas of accumulation. So technically, I agree with Willy Woo. I think his on-chain data fundamental analysis. First off, for those of you that don't know, Willy Woo was an analyst at a hedge fund that went bust. Okay, so Willy Woo hedge fund bust. So let's just be specific here. Where was it? Oh, they don't even goes broke. Let's try to be clear here. They've hidden it in amongst a bunch of things. So anyways, Willy Woo was a partner of a hedge fund that went broke on the COVID collapse, we'll call it. So I try to be very weary of the people I listen to. In fact, I don't listen to anybody other than Cathie Wood. So first off, I would ignore Willy Woo. Personally, I ignore Willy Woo, and I listen to Cathie Wood instead. So here, instead of bad talking someone, because I think Willy Woo's probably a great person, and he's probably doing great things for the market, I don't listen to him at all. So I have nothing valuable to say about that. But who I do listen to is this badass woman right here. If you do not follow Cathie Wood, I don't know what you're doing. This is really probably the only person I listen to about market macro perspectives. Willy and his team have been horribly wrong. They missed the COVID collapse. So I'm not sure. That's all I know about Willy Woo is that they missed that. I don't care about what else you got right when you missed one of the biggest moments in history coming and we had months of data. So instead of bad talking someone, so please, I'm not bad talking Willy Woo. I don't listen to him, and as a matter of fact, this is who I listen to instead. So I've never once listened to anything Willy Woo has had to say. It'll probably continue that way, Maybe I should have him on the show to change that. Maybe it's good for me to try to tell you what, ladies and gentlemen, so I don't sound like such an asshole. I will reach out to Willy Woo and have him on the show. Maybe I can get a better perspective about what he thinks on the market, just for fun, because I don't want to sound like a dick. I just don't listen to him. But here's who I do listen to. Anyways, subscribe to Kathy Wood. We'll leave it at that. This is Tia with the Arcane Bear. I apologize to Willie. I didn't mean to sound like a dick there, but sometimes it happens. Anyways,